From CGTN headquarters in Beijing, this is The Hub with Wang Guan.
Hello and welcome to The Hub. I'm Wang Guan in Beijing. China's economy has made a solid start in 2025. In the first quarter, GDP grew by 5.4% year-on-year, surpassing expectations. From January to April, retail sales increased by 4.7%, indicating a mild recovery in consumer confidence, while total trade rose by 2.4%, despite ongoing global uncertainties and U.S. tariff pressures. So what is driving this resilience? How is China managing to navigate these challenges? To delve deeper into these questions, I'm joined by Anthony Cheng in New York. He's the former global chief economist at JPMorgan Chase. In Henderson, Nevada, we have William Li, chief economist at the Milken Institute. And here in the Beijing studio, we have Professor Liu Baocheng, Dean of the Center for International Business Ethics at the University of International Business and Economics. Professor Liu, it is a mixed bag. GDP growth beating expectations, consumer spending up a little bit, but industrial output, or rather a major index gauging the enthusiasm of Chinese producers, is less than robust, to say the least.
That's right. I view the first quarter, or well up to the end of April's performance, with cautioned optimism. There are some shining figures, like what you mentioned with regard to GDP growth rate, which is really almost double to the prediction of a global growth. Now the retail sales and also the penetration rate of the new home alliances, e-vehicles, etc. So these are really the optimistic ones. But we also read that the last month, the PMI, the Purchase Manufacturer Index, which is a strong indicator of the enthusiasm or momentum of the investment sector, has really dropped into the contraction stage. And also the real estate continued to drag Chinese economy by a decline of 10%. The borrowing rate is still rather low despite the government quantitative easing and also government bonds. A moderate one is that the local government debt has been somewhat relieved by the support of the central government. So much is really relying on how we can really deal with the structural resilience, and also how we can really deal with the global challenges in terms of the Chinese export market, together with more added value through our innovation.
Mm-hmm. You mentioned the 5.4% GDP growth rate that is almost doubling the world average.
Yeah.
What is driving this number?
Chinese government deserve quite a credit because they provide a lot more liquidities through quantitative easing, through the bond issuance, and also through more of the fiscal policies to support infrastructure developments, and also in supporting the innovation part for the small and medium-sized companies in a hope of generating more of the hidden campaigns. And also they have the subsidies for the trade-in program, both for the corporate level and also for consumption level, etc. And then the government also is focusing on building more of the economy housing to provide to those low-income households. So these are really the effective measures. But now we're also facing a lot more uncertainty with the global marketplace. There has been relaxation over the Geneva talk between China and the United States with regard to the tariff, but there are still a lot more uncertainties. And then the private sector needs quite some time to really shake up their confidence, because right now the borrowing is still rather tepid, and hopefully that the new law on the promotion of private economy can really be able to generate more of the confidence into the private investors.
William, let me turn to you. What is your reading of the Chinese economy figures coming out regarding the first half of the Chinese economy?
There's never any doubt that China is really unsurpassed in being able to produce stuff. China's manufacturing sector and its production in general, I think, is the most efficient and productive in the world. And it's proven that over the many years. And what I think the concern that was expressed by the working group last year, the Communist Party's working group, and economic plans that it laid out was on the demand side. The demand side is where there are concerns that despite all this production, all the salaries and wages that are paid out, people are saving those wages and salaries rather than spending it because they're uncertain about their future. There's not an adequate safety net. They're worried about their retirement. They're worried that their wealth in the property sector is not going to stay with them. So there's a lot of concern on the demand side that prevents them from spending this tremendous amount of wealth that China has produced. And so I think that discrepancy between the supply and demand side is really where the real issues for China going forward will be. But there's really no doubt that China is really unsurpassed on the supply side in producing stuff, and not just any stuff. It's producing stuff that's high tech, the leading edge of technology for electric vehicles, solar panels, and all the high tech industries that. So the supply side is a resounding success for Made in China 2025 and a resounding success for production going forward. As I said, the difficulty then is, will the Chinese population be able to buy all that stuff or not? And right now the answer is no. And I think the dependency of China on exports is to get rid of some of that surplus because it can't sell all that stuff at home.
Well, William, you mentioned the dichotomy, if you will, between the supply side and the demand side, AKA people are not that willing to spend. What else can the government do? I mean, what policy mix do they have in the toolbox to really make the Chinese consumers more willing to spend?
China has tried a lot of the tools that are standard toolkits, incentivizing people to turn in their old consumer durables like washing machines and cars and stuff to buy new ones. But that is just bringing forward stuff that they would have purchased in the future into today. So it leaves a gap for tomorrow, right? You can't continue these incentive programs forever. The other thing that I think would be very useful is to put in a clear safety net that guarantees people's retirement income. And unemployment insurance that guarantees some subsistence level of income for when they lose their jobs and transition from one job to another. And there's a lot of transitioning going on in China right now because the shift from low value added to high value added manufacturing is such an important policy imperative that a lot of people are having to retrain and get new jobs. And during that transition period, unemployment insurance would help boost the confidence that Professor Liu talked about was lacking in both borrowing from banks and also lacking in spending.
Anthony, let me turn to you. What is your reading of the Chinese economy? We've heard from both professors. There's optimism, there's caution. What do you think?
I think everything that I've heard is true. Dr. Lee is correct in saying the safety net is not very strong. But I think they're moving in the direction of trying to support the economy. And the toolkit is the standard one. China can still lower the reserve requirement ratio. They can still lower interest rates. The trade-in program is working. We saw that, in fact, home appliances were up 38.8% on a year-over-year basis. Yes, it is moving consumption forward, but it's certainly helping. But in terms of the safety net, some of the things that could be done in China is to sort of increase the opportunities of the rural population, because we know that the pensions of the rural population are much lower than they are for the urban. That's the reason why when you look at a typical urban worker or consumer, they spend a lot more or a bigger share, the higher marginal propensity to consume than say a rural worker. You also want to make it much easier, perhaps, for rural workers to build housing in the urban cities, the so-called hukou program. I know that there've been some strides in trying to improve that. These are all things that they can do in order to improve consumer spending. Now, in terms of improving growth in the economy, I think that one of the things they have to do is perhaps be more aggressive about the dual circulation, where they actually try to stimulate demand not only in the United States, but also overseas. Now, there's some markets where it's very challenging to increase the demand, like sending more products to the United States. That's going to be a little bit of a challenge. Sending products to Europe may be a little bit of a challenge. But certainly what China has done is increase the proportion of the goods that they export to the Belt and Road countries, to the point where more than 50% of the trade that China conducts is with the Belt and Road countries. And that's why when you look at the share of Chinese exports that come to the United States, they're down from a recent peak of over 20%, almost 22% in 2017, and now closer to 13%. So they are diversifying their export base. That I think is important. And also get more excited about exporting to countries that are a bit friendlier to China in order to get rid of all those surplus products that Dr. Lee has talked about that China produces, because they are very efficient at producing products at a lower price and not as good at trying to distribute it inside China, because they're producing more than they can consume.
Yeah, two other issues I really want to add. One is whether China needs to take a long-term view, because education expense has really dropped by 0.3% last year. And this is something that's alarming as an educator for my life. So if we really go for high quality growth, we need high quality skills among the people. And so therefore, the Chinese per capita, the expenditure in terms of education is even slightly lower than the average of the developing economies. So this is something that's rather awkward. So therefore, I would urge the government to spend more to invest into education, because at least now we need to cover 12 years of compulsory and free education. So far, we are still having 9 years of compulsory education. So this is something that's really generate long-term sustainability and high quality growth guarantee. And the other issue is a structural issue, because you see that there are a lot of supply that couldn't be sold, and inventories are building up. But if you go for good schools, if you go for good hospitals, you need really to build a more of a social network in order to get really the right type of service in time. So therefore, we need to carefully look at the entire structure. Where are those areas that consumers want to spend money but they do not have the opportunity? And then where are those the redundant supply that we need to eliminate through market operation instead of the government, the tough hand actions.
Yeah, well, we noticed that the government is making conscious efforts in stimulating growth, lowering borrowing costs for enterprises, which also means lower in reserve ratios required for banks, and mortgages down. What else can the Chinese government do at this point when it comes to, both on the monetary side and the physical side?
I would really generally advise that the government could do less by creating more, because we are really, our success is really dependent on deregulation. And right now, of course, when situation gets more complicated and there is also a shift into contingency mode, government can do something more, but again, the general picture is that the private economy will have to shore up. So and the fact that we produced a new law on the promotion of the private sector is also there to show that the government is recognizing the private sector does not really have the right type of confidence as expected by the government. So much is really dependent on what are the realistic measures to convince the private investors to really to further invest into the real economy. So right now, much of the money goes to the stock market in order to give a sort of a prosperity symbol. But now, stock exchange will be able to translate those liquidities into supporting real productivity and also innovation, of course. So therefore, because the private sector takes a lion's share, roughly 90% of the job opportunities, and now our graduates are also facing tough challenges in getting their job, not even the right job. So this is something that we need really to realistically do. So now President Xi also recently mentioned that over the next 5-year plan, we need to have a more rule-based and law-based economy where the both consumers and investors have a higher level of certainty in what is lying ahead in terms of the investment or consumption decisions.
Anthony, we see that in what President Xi described as new productive forces, including 3D printing, electric vehicles, lithium battery production, the Chinese economy is doing fairly well. Double-digit growth being registered. What sectors do you think hold the biggest potential to stimulate the growth of the Chinese economy going forward?
Well, I think it's pretty clear that they have to move towards high-tech value manufacturing, more technology. You're already seeing that. And you need to see more of that because that's where you can make a lot more money. China has already moved basically to shift production or diversify a lot of its production to other countries, other third world countries that have low labor costs because it frees up space for China to move into the high-tech areas that you've just described, whether it be electric vehicles, whether it be robotics, things like that, is probably the wave of the future. And that's where the Chinese value is to be sought. The only issue here is that how fast can they do it? They're moving in that direction. And that's how a lot of the export issues that China faces are being circumvented by outsourcing a lot of the production from Chinese factories into other countries, and then those products can go somewhere else. The problem is, of course, that some of the other countries are catching on and adjusting the tariff situation to reflect that.
One thing we will have to mention is the China-U.S. rapprochement, if you will, on trade and on tariffs. Professor Liu, let me ask you about this. You're the expert on this, if you don't mind me putting it that way. A truce between China and the United States in Geneva, a suspension of tariffs for the time being, 90 days. Where is the situation headed?
Well, right now, I think China is not really the highest target. Much of the solution lies in de-escalating the retaliation, actually, which is really what was achieved in the Geneva talks. But they're still hanging 24%, and also over the 3.0 started in the Trump's first administration since 2018. That's still hanging there. So yesterday I made roughly a calculation. There's still a hanging tariff of 57 to 59%. Over China. Actually, that's the initial type of plan. When Trump stepped into the White House in the first stage. So therefore, it still gives some more uncertainty, but also there's more relaxation. So the two good things that because Chinese businesses are very agile, so therefore they send a lot more of the inventories into the United States before the reciprocal tariff was introduced. Now you can see that the Chinese ports are really getting so busy, and also many small parcels are shuffling over there just in case that Trump can really turn in his mind after 90 days. So this is the situation. But generally speaking, the Chinese competitiveness and also the interdependence of the China and the U.S. economy is unshakable for whatever reason.
William, China's trade with the United States is down, but China's export is still growing 7% in the first quarter of 2025. This is remarkable. China's exports with the Belt and Road countries accounted for 50% of China's total trade. What do you make of all these?
Well, I think the huge jump in exports is the fact that American shoppers are also good shoppers. They know a bargain when they see it, and they'll buy stuff before the anticipated price increase due to tariffs. So that is the surge that came about, at least part of the surge that came about in the first quarter. I think the real message of the rapprochement between China and the U.S. was the recognition that they already have the basis of a deal. They had a deal in the first Trump administration where phase one was put in place, and they were going to put phase two and three in place to guarantee intellectual property protection and trade and services, opening up China's market for American financial products and other services. That is, I think, where the base of negotiation is, because let's face it, the deal that President Trump is offering, not just China, but the rest of the world, is come partner with the United States. Come build your stuff here, and I'll give you lower taxes, fewer regulations, and a smaller government with more resources and a protective barrier to protect you from unfair competition. And the UK has decided to go for that deal because they have been a partner with the US with massive investments in the United States. Japan is one of the largest net investment positions in the United States, and they too are going for a similar kind of a deal. But China has so far chosen to be a competitor and say, no, we're so good at producing stuff at home, we're going to produce our stuff at home. And so we're going to ship it to you as exports. And that's why they're facing a minimum 10% tariff barrier. Now, the high barriers that Professor Liu talked about are really fentanyl related. And that is a separate part of the deal that was already considered under phase one that they're trying to resurrect and to say, look, if China gets serious about cutting the flow of fentanyl and fentanyl precursors flowing into Mexico that are just destroying our country, then the 30% tariffs are gone. So I think, and from what I've heard of discussions between the Chinese and U.S. authorities, especially on the national security side, it looks like they are in almost at agreement that yes, we have to do something about that kind of illicit trade. So I think the 30% tariffs are almost gone, and we're back to the 10% tariffs, baseline tariffs, which I think is considered a price of admission for selling in the U.S. market. The U.S. is one of the most dynamic marketplaces for people to sell stuff in. President Trump would rather you produce the stuff here to sell in, but if you insist on exporting it to the United States, you pay a minimum 10% entry fee.
Yeah, William, I mean, of course, there's this issue of intellectual property, to be fair, and, government subsidies over the years, which a lot of countries do. But in all fairness, China wanted to sell more BYD electric vehicles to the United States, and it wouldn't take it. It wanted to sell more Huawei cell phones to the United States. It wouldn't take it either. I mean, it is a complex situation. Anthony, where do you think China-U.S. Trade negotiations are headed? What would a grand bargain look like?
I think the grand bargain would be if somehow tariffs go down to the same level that other countries are paying, which is right now that baseline level of 10%. If you get there, that would be a win-win. Yes, the fentanyl issue is front and center. Last year, fortunately for the United States, fentanyl-related deaths were down almost 30% on a year-over-year basis. That's still too high, and of course, the goal is to bring that number to zero or as close to zero as possible. But progress is being made in that front, and more progress will be made. And when that issue is resolved, I do agree with Dr. Lee that those fentanyl-related tariff charges will disappear, and that will be a good thing.
Professor Liu, why is fentanyl such a big deal?
Well, U.S. is really a victim of the drug trafficking. There's no doubt about that. And so many lives have been cost. But the issue is that whether it is really China who is really supplying this directly to the United States. So the investigation by the Drug Control Organization in the United States says that much of it is really handled in the last mile issue. So the fentanyl by itself is really having multiple purposes. It's like, you are doing a butcher knife. People use the butcher knife to, for legitimate purposes, or they can also use it to kill people. So now it's much lies in the how the United States is really taking the leadership and working with many other regimes to deal with this issue, and particularly in the last mile control, and also to tackle those tycoons that are dealing with those illegal drug manufacturing in the high mountains and also smuggle into the United States. So China is willing to cooperate, but China will not really be able to simply to kill those companies who are really having the legitimate manufacture and legitimate export.
Yeah, all these will factor into the grand bargaining of China and the United States going forward. Professor Lee, I want to thank you for your insights. William Lee and Anthony Chen in the United States, thank you both, gentlemen. And with that, we come to the end of this edition of The Hub on CGTN. Thank you for tuning in. I'm Wang Guan in Beijing. I'll see you again soon.